Welcome to Inside India. I'm Manisha Tank. Here are your headlines this hour. Presidents Trump and Xi meet face-to-face for the first time in 6 years, striking an optimistic note for relations between the world's two largest economies. Sherry Kang is on the ground.
The two leaders in their negotiation room as the tariff deadline looms, with President Trump calling his Chinese counterpart a great leader, with Chinese President Xi Jinping saying the U.S. and China should be partners and friends.
Over the years, I have stated in public many times that China and the United States should be partners and friends. This is what history has taught us and what reality demands.
And Treasury yields are on the move higher after the Fed cuts rates, as expected, but any further easing is far from guaranteed. We are also on BOJ watch. Japan's central bank due out with its decision anytime soon. No change is expected, but tariffs, inflation, and a more fiscally liberal prime minister could complicate the outlook. Hello, it is Inside India. Thank you so much for joining us. Let's kick off the show with a look at how Asian markets are faring this hour, and so much for investors to digest, of course, that all-important meeting between President Trump of the United States and President Xi of China taking place right now in Busan, and a very positive tone already coming out of it, but we have a mixed performance across the major markets. The Kospi up more than 1%, probably one of the better performers so far this session. The Nikkei still up near record highs, 51,396. We await that decision from the Bank of Japan. Like I was saying, no change is expected, but you never know for sure. But what analysts were calling for sure was the Fed rate decision, which we got overnight. And Jerome Powell spooking everybody slightly by indicating that there is no guarantee of another rate cut down the line, which is what many of the participants in the market were actually pricing in. He referenced the lack of government data to actually draw upon in making this policy decision. But we did get that very much expected 25 basis point rate cut from the U.S. Federal Reserve. So that is how things are shaping up this hour. Interestingly, the Shanghai Composite up just over 0.1%. A great deal of focus, like I said, though, on what is happening right now in South Korea, where the U.S. President Trump and Chinese President Xi Jinping are meeting. They shook hands about an hour or so ago. This is the first time they're meeting in some 6 years. It's a very, very symbolic, very important, multi-layered meeting. And it's in person. And if you recall back then, in 2019, the subject was the same. How do you diffuse the bruising trade war? Trump and Xi both spoke to the press ahead of the meeting. This is what President Trump had to say.
It's a great honor to be with a friend of mine, really for a long time now, if you think about it. The very, very distinguished and respected president of China. And we will be having some discussions. I think we've already agreed to a lot of things, and we'll agree to some more right now.
Well, certainly in their language, both presidents being very warm in their tone. Speaking of warm, let's head over to Sherry Kang, who is live in Gyeongju for us, keeping track of all of the news flow. It's quite an exercise to do so, and I suppose you just have to have eyes everywhere, Sherry. There's so much going on.
Yes, I wish I had like 10 different eyeballs to look at what President Trump is posting on Truth Social, what President Xi Jinping is saying, according to the Chinese state media, and really checking out some of the videos, how they are interacting when they were shaking hands, when they were meeting for the first time in about 6 years or so. Really pivotal moments that I want to keep track of. And it's an interesting moment for the markets as well, because this has been really the exercise, hasn't it? Threats of trade war and some kind of escalation that was, quickly followed by some kind of a de-escalation. But what we're getting from the two sides is quite interesting and quite different. When we're talking about the U.S. and China, really talking about fantastic relationship long term, this feels different. It doesn't feel like it's just part of these familiar cycles that we've been seeing over the last a few months or so. so which I must say have been really chaotic for a lot of business leaders and markets as well. Let's first take a listen to what Chinese President Xi Jinping had to say when he was actually meeting with his U.S. counterpart, Donald Trump. Take a listen.
A few days ago, in the latest round of consultation, our two economic and trade teams reached basic consensus on addressing our respective major concerns and made encouraging progress. This provided the necessary conditions for our meeting today. Mr. President, I am ready to continue working with you to build a solid foundation for China-U.S. relations and create a sound atmosphere for the development of both countries.
There are lots of issues on the table, outstanding issues, tariffs, fentanyl tariffs, TikTok deal, rare earth situation, as well as the technology curbs from the U.S. side on China. But I think there is always something that the U.S. and China can give each other to yield some kind of concessions from the other side. So I think that's where all eyes are going to be on whether there will be anything that will be signed. President Trump did say going into this meeting that they could be signing something today. Manisha?
All right. Sherry, it's really interesting because usually the devil is in the details. As you were indicating, they're talking about being friends right now. But the reality is we're still talking about two countries that are fierce competitors. And there are still going to be sticking points. And I think you were addressing some of it there, technology, AI. How do they get around this?
Yeah, and that's like a $1 trillion question or a multi-trillion dollar question, actually, Manisha. And I think it's really about finding stability for now and how the G2 actually work out some of the details going forward. We're not going to have solid numbers today, I would imagine, but it's really the two sides moving in the right direction and at least seeing eye to eye on what needs to be worked on and what needs to be worked out and how to navigate from here on. I think that's why the words from these two individuals matter so much for the global trade and markets. Let's first listen to what President Xi Jinping had to say at the start of their negotiations earlier this morning.
And it is normal for the two leading economies of the world to have frictions now and then. And in the face of winds, waves, and challenges, you and I, at the helm of China-U.S. relations, should stay the right course and ensure the steady sailing forward of the giant ship of China-U.S. relations. I always believe that China's development goes hand in hand with your vision to make America great again. Our two countries are fully able to help each other succeed and prosper together. Over the years, I have stated in public many times that China and the United States should be partners and friends. This is what history has taught us and what reality demands.
So definitely the messaging from the Chinese side seems to be that we're not going to stop competing with you, but Chinese development, Chinese competition doesn't necessarily have to derail or compromise what the U.S. has in its own vision in terms of growth and technological leadership. So I think that is really the main takeaway. And if anything, we've got the Chinese Premier Li Qiang, his remarks being published in the state-run media just this morning. Interesting timing, isn't it? Talking about how it's important for China to have the long-term domestic growth in order to navigate in the times of international uncertainties. So there is really a good reason to manage expectations. We're not going to see all-out world peace, I would imagine, and the G2 dropping their competition. And remember, Manisha, really quickly, that the U.S. president also needs to be mindful of American voters as well as the lawmakers just overnight. There was some Republican lawmakers already voicing out their concern and perhaps objection against the idea of allowing advanced Blackwell AI chips back into the Chinese market already.
Yeah, it's been a huge issue of contention over IP, and that's a much bigger conversation for now.
Yeah.
Sherry, thank you so much. And thank you for raising the China side of this, because Elaine Yu has been keeping track of China's side of these talks for us and what President Xi aims to secure on that note. Elaine?
Hey, Manisha. So we heard what President Xi Jinping has said just now, and he really struck a cordial tone, responding to Trump's positivity as well, saying it's a great pleasure to meet President Trump again, and it feels very warm to see him. And he said China's development doesn't contradict with Trump's vision of making America great again. That's according to the state media agency Xinhua. And it's not all talk. We've seen some gesture of goodwill on the soybean front. A Chinese state-owned food processing company reportedly bought 3 soybean cargoes from the U.S. this week. That's according to Reuters. And that's after China shunned the U.S.'s autumn harvest that has translated into billions of lost revenue for American farmers, many of whom are Trump supporters. Now, on fentanyl, China also seems ready to strike a deal on that front, saying China is one of the strictest countries when it comes to drug control. But the trickier part might just be rare earths. Many businesses and their advisors have raised alarm about the expanded export controls that have taken into effect, and including the extraterritorial provisions that will come into effect in December, requiring licensing for exports of items, even those made outside of China, as long as they contain 0.1% or more Chinese origin rare earth content. So we'll see what kinds of concessions the U.S. might be willing to make on that front. Potentially the 50% affiliate rule, applying the same restrictions to the subsidiaries of sanctioned Chinese companies, or perhaps the U.S.'s own export controls on U.S. origin software and tech. Now, Beijing is taking a bolder, more aggressive approach, especially on rare earths, before all the positivity we're witnessing today. But this seems to work with Trump, who analysts say is impressed with displays of strength. And as for Beijing, it has also repeatedly emphasized the importance of mutual respect and talking on an equal footing when it comes to these negotiations. So global investors aren't expecting major escalation because they basically acknowledge that both sides have effective leverage against each other, according to Morgan Stanley. So the question is how limited or how wide the scope of any deal might look like, given that it's unclear still how many things the two sides can actually agree on. Manisha?
Elaine, thank you very much for wrapping that up for us. You can read more about US and China trade and what's at stake on both sides of the agenda. It's all on our website. Just go and log on to CNBC.com. All right, the Indian markets will be coming online very soon. Here's what Gift Nifty futures are indicating. Let's take a look. Pretty much a flat open, 26,180 is what we're looking at. What's interesting about that is we finally got above that level. The question is going to be, are we going to find support above 26,000? The index was very much flirting with that all week, but didn't manage to hold. But we are now seeing that for a second straight session, potentially. So we'll keep a close eye on that. Now, the RBI is moving to speed up cross-border payments for individuals and businesses. The central bank has proposed new rules to ensure faster credit of funds once they reach the beneficiary's bank. Under the draft guidelines, payments received during forex market hours must be credited the same day, while those received after hours should be credited by the next business day. Liao Yiping is portfolio manager at Templeton Global Investments and joins me live in the studio. We can talk a little bit more about this. Well, we can talk about lots of things, I think. But do you think that's quite a significant ability to be able to do that? And the way things are moving, it's all about payments faster, consolidation faster.
I think that this is an incredibly consequential development. I think that India has already laid down significant digital infrastructure to really facilitate that.
Yeah, India seems to be at the forefront. I mean, since UPI, there has been so much that India has been sharing with the world about the progress that it has made on digital infrastructure. But with all of that in mind, I want to get into a little bit of the investment strategy outlook, therefore. What does that mean for India when you have this incredible rollout that's been happening over the last 10 years or so? And how do you leverage that? What does that mean for the future investment outlook?
I think that a lot of the regulatory developments, such as, for example, GST and RERA, and a lot of the sort of infrastructure improvements, both on the digital side with UPI, as well as on the physical side, we see with a lot of the railways, the roads, really lay down the foundation for a positive structural growth story for India going forward. We think that from a longer term perspective, India will be one of the fastest growing economies from a 5 to 10 year perspective. And we see a lot of structural changes in the economy that present good investment opportunities.
Okay, Yiping, you must forgive me. I'm just going to take us very quickly to some breaking news that's coming out. This is from the Bank of Japan. The rate decision has just hit the wires, and it is saying that a number of wires are coming out straight off, but let's just have a look at the yen. There you go. Did we get any change? That is always the big question. No change, but a lot of commentary is coming out. For example, the BOJ, Japan's economy, saying that Japan's economy is recovering moderately, although there is some weakness. Some weaknesses are seen. Also, we're getting some pronouncements on where certain aspects of the economy are going. So the BOJ also reporting that exports and output are moving sideways as a trend. We're going to start to digest all of this flurry of reports that are coming out. But the BOJ also citing the impact of FX volatility on prices, that it has become larger than in the past as firms have become more active in raising prices and wages. There's going to be a lot to digest here, but as expected, the BOJ remaining on hold on rates in Japan, and we're just getting not too much of a reaction there. I mean, it was very much as expected. So we've got the Nikkei just kind of holding firm there. It was a moderate performance out of the gate. The topics also up about 0.5% or so, and hardly any movement on that US dollar yen cross. Yeah, there you go, unchanged at that moment. Any views on the BOJ rate decision thus then? I think it's really interesting. We've had the Fed rate decision, the BOJ, and I think there is this ongoing conversation about what all of this means for rates for when you're looking at all DM or you're looking at EM at the moment.
Of course. I think if we start with U.S. rates, we saw a cut last night. I think that this was very well anticipated, and what this means for Indian markets directly, I think if you look historically, the correlation of Indian stock markets, Indian rates relative to U.S. is, I would say, lower versus other Asian economies. Of course, it is supportive for the rupee as well as Indian equity market valuations. And I think the volatility you see in Japan is actually an interesting contrast to India, where I think we have a really good setup because inflation has been comfortably in the lower band. We know this gives the RBI more flexibility in terms of their monetary policy. The RBI has turned more accommodative this year. We've seen 100 basis points of rate cuts, and I think we have a good runway for subsequent cuts should they want to do this. And this is very supportive, I believe, for the growth story looking into next year.
Absolutely. In terms of the runway for investment, we're looking at something relatively positive. And I know that, I believe that your view is very much that when it comes to the stock markets, and I'm glad that you mentioned the correlation there, this is very much a stock picker's market. Just work that through for us.
Of course. I think in the Indian market, from a bottom-up fundamental standpoint, is very attractive because we see increasing breadth. So the number of new companies being added into the listed universe, as well as depth, the improving liquidity. There's the long runway of growth. You also see that there are these structural changes, which means that in the listed universe, there are companies which we can really invest in for that earnings growth there. So in terms of sectors we like, for example, in discretionary consumer, what we find attractive is this emerging middle class, upper middle class. They have changing consumer preferences, changing modes of consumption. So you have companies like, for example, Eternal, formerly Zomato, that do the quick commerce and the food delivery, or a name like Indian Hotels, which is a leading hotel proprietor. They own the Taj brands.
Right. But I want to talk about the risks as well. It's very easy for us to get very excited about the future, and then you see all of this good news that appears to be coming out of Busan in terms of the warm and positive reception between those two presidents. It's great. Let's talk about the positive, but there are the negatives. One of the things that I have often wondered in India is we don't talk about credit much. We don't talk about the debt situation much. And I wonder about the leverage that we have to incur to get to a stage where we're talking more positively. Is there a risk factor there? And if there are risk factors, which are the ones you're most concerned about?
Sure. I think that when you're looking at debt and India's fiscal position, I'd actually say that's relatively well controlled. If you look at this year, I think that the government is poised to undershoot their fiscal budget. And I think next year they have committed to a glide path of continued fiscal consolidation. So I think that that is quite in control. I think when we look at risks internally, I think we continue to look for continued regulatory and reform momentum. I think a lot of big bang reform has already been undertaken, and we continue to look for that fine-tuning of regulation. That's the key for domestic. And then I think for international, we do need to focus on this continued U.S.-India tariff negotiation, because at 50% right now, of course, understanding that there are some exemptions for key categories, it is on the relative higher side compared to other manufacturing locations.
And the indications we seem to be getting are that the conversation is going on in the background, and at some point we'll hear about whether what's going to happen on that front. But in fact, when I was talking about debt, what I was referring to was more the consumer side. Has that been a concern at all?
I think we've been monitoring it closely. If you look at the banks and the MBFCs, there have been select issues that have been highlighted, particularly in unsecured and buy now, pay later. But I think if you look at the most recent earnings results, what you have noted is more encouraging commentary from the large banks on their consumer portfolios, that this has been a short-term issue, that they're seeing actually the risks receding at current point in time. So worth monitoring, but I don't think it's a systemic issue at current point in time.
Okay, all right. Yiping, it's been great chatting to you. And thank you for fielding the breaking news as and when it came out as well. That would be really grateful for that. Okay, from Templeton Global Investments. Right, we're getting a few more lines on that note from the Bank of Japan. So let's bring them to you now. The central bank just leaving rates on hold as expected. And so we haven't seen too much market movement. The BOJ flagging that Japan's economic growth is expected to slow due to trade policy and slowdown overseas. The report also saying that medium and long-term inflation expectations are rising moderately. And one more look at the Japanese yen for you. There you can see. Again, we're up about 0.1%. We're keeping a close eye, 152 there on dollar yen. And the market reaction otherwise, when those markets return from their lunch break in about 7 minutes, it has been pretty muted. Anyway, stay with us on the show. We've got much more coming up. Hello again. It's Inside India. I'm Anisha Tank. Thank you for joining us. Now, the Federal Reserve cut its interest rate by 25 basis points overnight. CNBC's Steve Leisman has the details.
A divided Federal Reserve cut interest rates by a quarter point as expected to a new range of 3.75 to 4%. But Fed Chair Jay Powell disappointed markets in his press conference by signaling a far more neutral stance on a December rate cut than had been priced in.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
The comment triggered an immediate sell-off in stocks, which had barely moved on the statement a half hour earlier, and a surge in bond yields as markets repriced the chance for no cut in December. The chance of that cut in December falling from 84% before the press conference to 67%, but the probability that it happens now in January rising from 42% to 80%. So the direction priced in by markets remains intact, but the pace is in question. The Fed noted the lack of data resulting from the government shutdown, but seemed more focused on the data it does have, showing reasonably strong overall growth, a booming stock market, and no acceleration in the softening of the job market. The vote came with two dissents, one by new Fed Governor Stephen Myron, who once again wanted a 50 basis point cut, and from the other side by Kansas City Fed President Jeff Schmidt, favoring no rate change. It's unclear now what the Fed's default position is. If the alternative data continues to show no change in the current read of the economy, the Fed may take a Christmas break from cutting. Steve Leisman, CNBC Business News.
We are still waiting for Presidents Trump and Xi to wrap up their highly anticipated meeting in Busan, and we will bring you what we know after the break. Stay with us. may be very aware that there is a very important meeting going on in Busan right now between Presidents Trump and Xi. They have been meeting, and about an hour or so ago, we saw them shaking hands, very firm handshake. Of course, some analysts do watch this for the kind of body language. It a reminder that it is their first face-to-face meeting in some 6 years. And it's the first time they're meeting in Trump's second term in the White House. Trump and Xi both spoke to the press ahead of the meeting. They said both teams have already reached some consensus and hoping more could follow. So there's a lot to digest already coming out of this meeting, and it hasn't even finished yet. It is meant to finish within the next half an hour or so. Let's head back, though, to South Korea. Sherry Kang is in Gyeongju. She has been keeping track of this meeting for us and also been digesting what's at stake. Sherry?
Yeah, Manisha, that's exactly what I've been saying over the last few hours, that we didn't even start with the real thing. We were just having a warm-up yesterday with the U.S.-South Korea trade deal, and we just saw the handshake, and we don't really know what's going on in that negotiation room, but a lot of signals have been pointed to something tangible might come through here. Even President Trump himself said they could be signing something today, and lots of hints at progress in terms of where they stand and how they might have narrowed some of their differences. I mean, if anything, the messaging coming from the Chinese President Xi Jinping himself before the cameras were actually told to leave the room, Xi Jinping basically said that China's development goes hand in hand with America's vision to make America great again. So that sounds pretty amicable to me. I think that has been really priced in because of a lot of signals that have been dropped by the U.S. officials as well. But let's first take a listen to this soundbite from the Chinese President Xi Jinping just earlier this morning.
A few days ago, in the latest round of consultation, our two economic and trade teams reached basic consensus on addressing our respective major concerns and made encouraging progress. This provided the necessary conditions for our meeting today. Mr. President, I am ready to continue working with you to build a solid foundation for China-U.S. relations and create a sound atmosphere for the development of both countries.
So there we go, China saying that they are ready to work with the United States. So that is quite a big message and quite a big turnaround from somewhat chaotic a few months that we saw in terms of the trade relationship between the U.S. and China. And it wasn't just between the U.S. and China. It's really the start of the Trump administration, the second term for President Trump himself, and really raising a lot of tariff tensions with so many trading partners other than China as well. But we saw some of that getting cleaned up a little bit earlier this week with, of course, countries like Japan and South Korea. So I think that is also a very interesting as well as important setup going into this bilateral between the U.S. and China. Anisha.
Sherry, speaking of bilaterals, we also know that there was conversation between the U.S. President Donald Trump and South Korea on trade. The U.S. Commerce Secretary, Howard Lutnick, he provided more details about that agreement. Can you fill us in?
Yeah, so I was actually trying to compare what the South Korean government was saying yesterday and what Commerce Secretary Howard Lutnick was saying in his post. And we don't really see much of discrepancy, so that is good to know that we have a deal, although we're still waiting for the full details to come through in the coming days. But there is this is a progress from the framework that was reached back in July. So just to give you some of the highlights here in terms of what we're getting from both sides, that $350 billion of investment that South Korea is making in the U.S. The major problem for the South Korean side is how to structure that deal and how to fund that. And I think there was some concessions in terms of the breakdown of that. So $150 billion will be invested in the U.S. shipbuilding. Additional $200 billion will be, made as a investment investment pledged, but there could be these investments could be made in installments. It doesn't have to be all in cash. It could be done in loan and loan guarantees. So I think that is a positive news for the South Korean side. However, it's not tariffs across the board being brought down to 15%. It's just autos at this point. So I think that's something that we need to keep in mind here. For the full details of the agreement, we're going to get that in the coming days, like I said. But I think it's important to point out what happened with the shipbuilding space. So we definitely see a clear market reaction today. We've got shipbuilding actually leading the gains on the Kospi. And as you can see, Hanwha Ocean definitely standing out with gains of more than 8%. Actually, right out of the gate, it was surging more than 10% or so, 12% or so. And I think really the story here is President Trump posting on Truth Social that he is allowing South Korea to build nuclear-powered submarines out of the Philadelphia shipyard. I think this is a prime example of how South Korea can be useful and helpful in terms of the Trump administration's vision for touting the American manufacturing boom. Remember, U.S. shipbuilding industry definitely needs help from countries like Japan and South Korea. We actually saw that earlier this week with, of course, U.S.-Japan deal, a lot of talk about rare earths, but also shipbuilding cooperation. So I think there is definitely the shipbuilding angle. There is definitely the nuclear submarine angle that we need to look out for. And this sets it up very interestingly and perhaps a little awkward for the leaders of China and South Korea when they're holding their own bilateral meeting this Saturday, because Hanwha Ocean is one of the companies, it is actually the very company that China decided to slap sanctions on just a few days ago. Venetia?
Sherry, thank you for that. What an interesting point to point out. And it always makes me think it'd be amazing to be a fly on the wall for some of these conversations. Thank you so much for rounding all of that up for us, Sherry. Elsewhere, President Trump has framed tariffs as a means to achieving peace. The US president mentioning India, which is also in the midst of trade negotiations with the United States. In his APEC speech on Wednesday, he said he was considering a levy north of 200%.
No, but here we are, we're doing deals. So you add an extra sentence and you say you have to stop shooting at each other. 7 planes were shot down. You have to stop the war. And they stopped the war. And if it weren't for the tariffs, I said I was going to put 250% tariffs on each country, which means that you'll never do business. In other words, there's nothing you can sell for 250%. That means that's a nice way of saying we don't want to do business with you.
India and the European Union say more talks are needed on sensitive issues such as steel, autos, carbon levies and other EU regulations as negotiations continue on a long-pending free trade agreement. Commerce Minister Piyush Goyal met EU Trade Commissioner Maros Sefcovic in Brussels, with both sides reaffirming their goal of concluding the FTA by the end of 2025. Talks have gained momentum as Brussels accelerates trade deals following political shifts in the United States. The EU is India's biggest trading partner, with goods trade reaching $137.5 billion last year. That is nearly has doubled over the past decade. India stressed the need for flexibility for labour-heavy sectors like textiles and leather, while raising concerns over the EU's carbon border levy. An EU technical team will visit India next week to push discussions on that forwards. We are counting down to the market open, meanwhile, in India. This is how things are shaping up right now. The question is always, or has been the whole week, will the Nifty hold above 26,000 this session and into the end of the week? You can see that we're looking at a muted start so far as the open goes, and we will keep a close eye on that for you. Okay, India is weighing a bailout of roughly $12 billion to rescue its debt-burdened state power distributors. But states will only receive funds if they agree to privatize their utilities or list them on the stock exchange. This is according to a draft plan by the Indian Power Ministry. It's been seen by Reuters. The move marks the government's most forceful attempt yet to fix the financial stress in the state-run power distributors, which are struggling in losses and debt despite multiple rescue packages. Private power firms like Adani Power, Tata Power and Reliance Power could benefit if stakes in state utilities opens up. The plan is expected to be announced in the February budget announcement. Elsewhere, Suzuki Motor plans to roll out 8 new SUVs in India over the next 5 to 6 years in a bid to claw back market share. Speaking at the Japan Mobility Show, Suzuki Motor President Toshihiro Suzuki said that the company wants to lift its India share back up to 38%. It wants it to move from 38% back to around 50%, where it stood before the pandemic. Suzuki called India the most critical market and said it plans to remain the country's top car exporter and become India's leading EV manufacturer. Earlier in August, Suzuki announced an $8 billion investment in India, targeting an increase in local production capacity to 4 million units a year from 2.5 million units. Well, Pulkit Patni is India Industrials Analyst at Goldman Sachs, and I'm going to take a huge breath here because there's lots to digest. That's really interesting coming from Suzuki Motor. There was a lot that must have come out of that autos gathering, and it's a really big one for Japan. But what does it say about Indian industry? What does it say about the Indian market moving forwards?
Sure. Thank you so much, Manisha, for having me. Manisha, our thesis since early this year was that government capex in India is plateauing. And I think it was very evident that after spending 5 years on capex, that the government is going to take a breather and growth is going to plateau. Where we weren't seeing too much was private sector capex. It was already sporadically in certain sectors where we were seeing private capex coming in, sectors like electronics, new energy, EVs, etc. But we all know a lot of this investment was actually imported, where equipment was important, and hence the overall private sector capex cycle was muted. Where we are seeing inflection, and these are early signs at this stage, is that we finally started seeing old economy cyclicals starting to do more capex, and hence sectors like metals, petrochemicals. In the last 6 months, we've seen some announcements which are actually pretty encouraging from the private capex cycle perspective.
Okay, I wondered about that because the focus has very much been on how does India mitigate against external pressures. India doubles down on domestic investment. So do you see that that is getting that robust traction that analysts would, that markets would want to see?
While government capex still happens to be a large part of the overall pie, as private sector capex picks up, and be mindful of the fact that when we talk about old economy capex, sectors like power, metals, these are all sectors where the total numbers add up to be big numbers. We definitely see encouraging signs right now. I would say it's a little early, given that anybody who is looking at doing capex from an export perspective would still want to wait for the final outcome of tariff negotiation. But barring that, from the overall perspective of self-sufficiency, we do see quite a lot of incremental investment that is coming into India. And as I said, the last 6 months are showing some signs of that.
Okay. Pulkit, though, we just reported on how a bailout of roughly $12 billion to rescue these debt-burdened state power distributors, this is still being weighed up as an option. Surely there are systemic sort of foundational aspects of these growth expectations that need to be resolved if we can really be as optimistic as many out there have been. And, and when we look at the markets, you see there is all of this optimism, but there are still some really serious issues that need to be addressed.
There are always certain issues that will need time and the political will to get it done. But beyond that, I think we have to look at what is getting done, right? If you just look at the last sort of 5 years, after the Make in India plan came up, Electronic manufacturing, for example, as a theme, has seen quite a lot of pickup. I'm sure you've heard about, Apple and the entire supply chain getting set up in India. We've seen just very recently incremental approvals come under the ECMS scheme for more electronics manufacturing in India. So we really think that, yes, it's a step-by-step process. And as I highlighted, what was missing in this entire piece for the last sort of 5 odd years was private capex investment in old economy. Power in the last 12 months has seen a lot of investment. I'm sure you've heard about how thermal power has picked up investments again. We are seeing a lot of investments in power transmission, distribution, etc. So if we take a step back and see, there are systemic issues, but we are also seeing incremental investments happening on the side of the old economy.
There's certainly a massive transition that needs to go on, and it needs a lot of investment. Okay, I want to break down some economic numbers that came in earlier this week, and this was the industrial output numbers. There were some revisions. A little bit of a mixed picture, but there's something that jumped up at me was this output of consumer durables, which rose 10.2%. This was a huge double-digit number. And otherwise, we had a pretty muted showing. What did you make of these numbers that came out this week?
Manisha, when you look at the GST cut that got implemented in the third week of September, it shouldn't come as a surprise to anybody that pent-up demand for the last 1.5 months since GST cuts were announced, the fact that there have been multiple steps taken by the government in the last 12-odd months in order to spur consumption, should drive an uptick in demand for consumer durables electricals. Now, last month, obviously, also was the preparedness for the festive season of Diwali. So to that extent, the growth numbers should have been strong. One of the core theses that we have been speaking of recently is that we've been in a pretty weak consumption cycle overall for the last 3 to 4 years. And after that K-shaped recovery post-COVID, and now with all these steps taken, whether it is the income tax cut, whether it is GST cut now, and a pay commission implementation in the next 18 months, we are fairly positive on the broader consumption uptake in India. And from an investment perspective, while government capex seems to be plateauing, as I said, we are seeing early signs that private sector capex is picking up. I would probably wait for some more data points before being very conclusive there.
Okay, I want to pick up on some news that we got out today. So the Bank of Japan has decided not to move on interest rates, but something it did talk about was expectations in terms of economic output, and it cited the expectation of lower global economic outlook. To what extent are you factoring that into your conversations around India's outlook vis-a-vis the external scenario right now, particularly in industrials?
So if you look at the export data from India, we saw some very strong growth in the months of May, June, July, and part of it was just front loading of exports ahead of implementation of tariff. And the data points in August, September have been fairly weak, which is a reflection of the concerns regarding tariff. Now, I think a large part of the outlook will depend on how the tariff negotiations go. So very difficult for us to make a conclusive remark here. I think what we can say, and this is something that we've been flagging, that incremental investment purely dedicated to export will have a wait and watch. But the domestic-driven capex continues because that doesn't get impacted by what happens on the tariff outcome.
Okay, so some degree of insulation. One last thing I want to put to you is COP is coming up very soon, and in the midst of the environmental conversations that are going to be happening, we heard of a cyclone that has hit India yet again. We're dealing with various weather challenges. How much of this is beginning to factor in to your expectations for the coming months, for the coming years? Because this is becoming increasingly frequent now that we are talking about the way the weather is going to be impacting on forward growth projections.
Yeah, no, I think whether it is government regulation or companies in India, they've been focusing on weather regulation quite meaningfully. Having said that, I think as a developing market, India is doing a balancing act between wherever growth is required versus the balance between environment. And I think we see that across the board. A conversation 4 years back on whether thermal power will see an upcycle would have probably resulted in saying no more thermal power orders. But as you see some of these come through, I think the balancing act between what is required for the country to grow vis-a-vis environment is what the government and the private sector is focusing on.
Okay, we're going to leave it there. Pulkit Patni from Goldman Sachs. Thanks for joining us live on that remote camera for us. Thank you. Okay, let's do a little check in on some precious metals. Silver. Demand for silver has dropped after a rush during the festive buying season. Premiums, which had surged to as high as 10% above official domestic prices during Diwali, but prices have fallen since, and bullion dealers and silver prices are back to say that the prices are back to 25 to 40 cents per ounce. The pullback follows a price correction after silver hit record highs earlier this month, very much in tandem with gold, prompting investors to sit on the sidelines. Silver prices have climbed over 60%, though, year to date, drawing a record 53.42 billion Indian rupees into silver ETFs in September and doubling imports to 1,012 tons in August. That is a lot of silver. Markets in India have been trading for a few minutes, so we'll bring you some market movers. That's when we come back in just 2 minutes. Okay, we are seeing some action in Busan, in that small airbase where Presidents Trump and Xi have been meeting. We're just getting some notification from Chinese state media that they met for 1 hour and 40 minutes. Of course, both the leaders meeting for the first time in 6 years. The last time that they met face-to-face was 6 years ago in 2019. That was during President Trump's first term. This is now the first time they are meeting in his second term, and the mood has very much been a positive one. You can see that some of the security services there are getting into position near the various cars, quite a bit of movement inside. A few people taking photographs to one side, so that suggests that perhaps the two presidents are there, and people are taking an opportunity to take a note of what is quite a historic moment. Meanwhile, we are watching for any new lines that we might be getting from this, but we have confirmation, it seems, that the meeting is over. There we go. We're beginning to get a few people emerging now from the building. Obviously, there's a lot of flux, so, you know, we see a few of the security staff coming out and we think it's all happening, but actually they're just getting ready for something else. With all of that in note, and as we keep an eye on those live pictures coming to us from Busan, let's see how markets are faring this morning in Asia in the first few hours of Asia trade. You can see there the Nikkei holding firm, up more than 0.5%. The Kospi has been the outstanding performer this session, up more than 1% at a lot of the tech-related stocks. But as Sherry Kang was pointing out earlier in the show, it is those stocks which have been directly impacted by conversations going on in the bilaterals between the South Koreans and the Americans on trade, and some of the opportunities that are opening up in some areas, such as shipbuilding, for example, but also nuclear capabilities, nuclear submarines, which has pivoted at least one of those South Korean stocks up more than 8%. This Hanwha Ocean up more than 8% this session. But overall a mixed performance. We've also got the Nifty coming online, 25,000. So dipping below that 26,000 mark, coming down about 0.3% for the Nifty at the open. A very much a mixed performance. But what is happening here is a lot of investors keeping an eye on this conversation that has happened between President Trump and President Xi in Busan. They've wrapped up that meeting. As we understand it from Chinese state media, they spoke for 1 hour and 40 minutes. There were a number of comments that came out as they sat across the table from one another before that meeting. It was interesting, actually, to get so much commentary coming from them, but it was very positive in tone. President Xi talking about how both sides had made encouraging progress, which had eventually led to this. There you can see the two presidents walking out now. We may see a handshake. Normally we do. They're just look as if they're having a bit of a conversation there. But these are live pictures coming to us from Busan. There you go. There is the handshake. And like I said before, there are a lot of analysts who will look at this and they'll look at the body language, they'll look at the tone, they'll analyze the language. Now we will wait for details as to what they actually talked about. The indication is that there will be a trade deal, but the details of that are yet to be seen. We'll let those pictures breathe for you. Thank you for joining us on Inside India. Keep watching CNBC.